What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started.
Biolase, ticker symbol BIOL, saw a 20% increase in share price today on some positive news. Stick around till the end of the video because I'll go over what this company does, why the share price is flying high today, what their financials look like, and then finally we'll take a look at some analyst forecasts for this stock. But first, I quickly want to talk about two of our stock picks that have exploded this year. We talked about Kiddos, ticker symbol KIDZ.V, when it was trading at around 50 cents on the 23rd of December last year, and since then, the share price has more than doubled. We also talked about Burcon Nutrascience Corporation, ticker symbol BUROF, in December last year, when it was trading at around $2.55, and this has also nearly doubled in share price. Now, let's get back to today's stock. Biolase Inc. is a medical device company and global market leader in the manufacturing and marketing of proprietary dental laser systems that enable dentists and dental specialists to perform a broad range of minimally invasive dental procedures, including cosmetic, restorative, and surgical applications. Biolase's laser systems are designed to provide clinically superior, patient-friendly results for many types of common dental procedures compared to those achieved with traditional instruments. Biolase has sold over 41,200 laser systems to date in over 90 countries around the world. So it's clear to see that they have an innovative product that's solving a core issue and that there is decent demand for it because they have sold over 41,000 laser systems to date. So this company falls under the penny stock territory and has a market cap of only 147 million. One red flag that immediately stands out is that BIOL's debt to equity ratio is on the high side as it stands at 161%. We consider a debt to equity ratio above 40% to be high. The good thing is that they do have a stable cash runway. What this means is that they have sufficient cash for more than a year. This is good because it means that they might not have to raise money through shareholder dilution to keep operations going. 13% of the company's shares are owned by institutions, with Vanguard being amongst the top 4. So now let's take a look and see why the share price is up so much today. In a recent review of the market's current conditions, JP Morgan strategist recaps his view that 2021 will see modest gains across stocks generally, but outperformance among the small to mid-cap sector. So according to this TipRanks article, Biolase is one of these stocks. This is what a Maximum analyst Anthony Venditti had to say. While the international market continues to lag the US in COVID recovery, BIOL delivered its second consecutive quarter of significant sequential revenue growth, driven by US sales to new customers, dental specialists, and dental service organizations. We are encouraged that dental specialists comprised 40% of the company's US laser sales in Q4 2020 and expect the company's recent launch of both the Endo and Perio Academies to contribute to increased adoption by the 5K endodontists and 5K periodontists in the US. Moreover, BIOL has placed an increased emphasis on converting small DSOs that can adopt BIOL's technology more quickly, which we expect to bolster short-term revenue as the company makes progress converting larger DSOs such as Heartland Dental. Based on the unique value proposition of BIOL's products, its continued progress in penetrating DSOs, and its increased traction with dental specialists, we reiterate our buy rating. Along with that buy rating, the analyst sets a $2 price target that indicates a 165% share growth. According to 4 different analysts on TipRanks, this stock has a strong buy rating and a target price of $1.94. So according to these analysts, there is still plenty of room to run here and you could potentially double your money still. But keep in mind that analysts aren't always right and penny stocks generally are very risky. So what's the bottom line with this stock and what am I doing? There is no doubt that BIOL has an innovative product and lasers bring a host of benefits to dentists and their patients, including fewer aerosols and a gentler touch during procedures and more comfortable healing afterwards. So they definitely have a working product, an innovative product, and there also seems to be a good demand for it. I like this stock, But overall, the high debt to equity ratio does concern me a little. I generally avoid buying stocks that have gone up over 20% in a single day, so personally I look to wait before the hype dies down a little and basically wait for a better entry point. As I already have a few high risk stocks, my position size here is going to be small. Anyways guys, that's it for today's video. Have an awesome day and I'll see you in the next one.